Hello everyone, Kim here from the Traders Club, TradersClub.com. Thank you for tuning in to today's market commentary. Again, my name is Kim, and we're going to look at S&P 500 today. And I do want to talk about utility sector. We'll look at Apple, Amazon, Facebook, Tesla, and Google. And we'll go through them pretty quickly here. First of all, I do want to look at Spider 65-minute chart, right? So we're looking at 65-minute chart here on the S&P 500 Spider Trust. First of all, what we have to understand is looking at this kind of a 65-minute chart here, what we have is that on Friday, it looked like we continued on higher. We made a higher high, which was a good sign for the buyers. And then we came in on Monday morning, just 2 days ago. And what happened was it a Monday morning? Actually, Tuesday morning. Actually, this was Friday. We gapped on a little bit on Monday. And then Monday looked like it wanted to continue on, and then we came in Tuesday morning, market gap down. We did see that highway doji pattern there, and then we gapped down, and then we continued on lower until yesterday. We closed here, and then we gapped up this morning, and that was quickly sold off, so it was a gap and fade. And then what happened was we came down to this support level at about 187.38. That's what we're seeing here. Was found support. A lot of times you can see that there's a gap area here. When the gap gets open, and then when it gets filled, that level becomes pretty strong support. And that's exactly what we're seeing here. You see that gap area that had been acting as support 3 occasions here, right? So we came down hard, but a lot of short-term buyers in this vicinity here, people who bought it here and here, they made some money just doing a couple days here. So that's kind of what's happening right now. But I think the more bigger scheme of things, what's happening right now is that we have formed inverted head and shoulders on the S&P 500. You can see that we kind of have this kind of an awkward looking left shoulder there, and then we got the head, and then more symmetrical looking right shoulder there. Really though, all it is, these head and shoulder formation or inverted head and shoulder formation, all it is it has ceased to create or ceased to cultivate lower low. That's all it is. And then it is starting to create or cultivate higher low, right? So that's what downtrend is. Downtrend is lower lows and lower highs, right? You guys understand that? And then what happened was it ceased to create lower lows and lower high. It starts to create higher low. And then what happened? We have created higher high. So that's what the inverted head and shoulder pattern is, if you really want to understand what it means behind just the formation itself. So because we don't want to just memorize it like a mathematical formula, we have to understand what this pattern conveys, right? So that's kind of what's happening here. So but confirmation is always the key. We always have to understand that formation can happen. There will always be certain topping patterns, certain formations, certain head and shoulders, certain double tops, double bottom. There's always potential formation is going to form in the market. But what we have to understand is that it must confirm. So you might ask me, well, what is it going to look like, when it confirms? Well, here, this is what we call neckline, right? 195, right? 195 level right here. That's what we call equal highs, right? We are no longer creating lower highs, right? We got lower highs and here, right? That was a downtrend. We no longer doing that. Instead, we have now created equal highs, right? You can see that this high is equal to this high, same length, right? Or same height. So it means we have created equal high. And then if we have the formation of this inverted head and shoulder, the question is, are we going to confirm this head and shoulder formation? As far as the minor term is concerned, we are above all the moving averages. We're above 10. Again, looking at a 65-minute chart, we're looking at 10 EMA, 20 EMA, 50 EMA, and 100 SMA. We're all above this moving average, which is a good sign looking at a minor term. We do have a 200 SMA coming down, so potentially that's a level. It's going to be served as resistance. So by the time this thing gets up here, we're probably going to see this 200 SMA coming here, meeting with the price action back at around 195-ish level. That's why I do think that 195 is going to be probably served as at least some sort of resistance there. And that's the neckline area, so neckline pivot along with that 200 SMA there. Here's a question though. Well, here's a key point about it is we do have a gap area. So every time when you're working with gap area, things can get hectic. So First of all, we've learned the truth that sometimes when gap gets filled, that becomes strong resistance or certain pivot. So the question would remain then, with that logic, then if we feel this gap to the upside, it could act as resistance, right? It act as support here. So we have to use that logic and apply it here. So it could act as support in this vicinity, which is very near to 194, 195-ish level, which is also the neckline. So I do think that we may get up, and then there are probably going to be some complications here. Probably it's going to be some congestion going on. There's going to be battle going on between bulls and bears. Bulls are going to think that we're going to break above this neckline. The bears are thinking that, well, this is a resistance. You guys not coming any higher. So there's probably going to be some congestion going to happen. The key thing about it is when this thing does pull back, and if you want to see this thing confirming, we want to see yet another higher low. And then breaking above that. So then in that process, we have created, you got the low, which is inverted head, and then we got that right shoulder, and then we create that higher low, and then we break above it. Once we break above 195, well above 195 level, then I think at that point, I think there will be probably a lot of buyers start stepping in and wanting to fill all these gaps here. So I think once the inverted head and shoulder gets confirmed, I do think the potential will get about 200 to 204 level, right? But what if we get rejected though? What if we get rejected in this vicinity of 195? We get up here, we get rejected, and if we get below 187.11, I think that problem will continue for the buyers, and at that point, I think if we break below this level, then I think the next level support will be 181, and then things will continue to be gloomy for the buyers in the minor term. So again, inverted head and shoulder, definitely a good signal here. It's a hopeful thing for the buyers. And a lot of times when you form kind of a, this kind of formation, it's more stable reversal pattern, I would say, because it hasn't just V-shaped higher. V-shaped is many times is probably the most stable pattern, because a lot of times a V-shaped higher could result in things like that. Though this was probably more of a double bottom, which is a more stable pattern, but a lot of times a V shape is very unstable. There could be a lot of volatility going on. There could be a lot of head fakes and traps and whatnot. I mean, even here we came down here, and when this thing came down, as you can see, if you're looking at 65 minutes, this was important support. And we break below this support, and then the last level of support right here, we even broken below that. This is how this market operates. So you have to understand that this market, a lot of people understand these support levels, and a lot of times the market will break these support, traps everybody, and it convinces everyone that this market is going to go a whole lot lower, and then it reverses. And just keep that in mind. That's how this market operates. When this market, you guys remember back in right here, back in November, early November, I mean, this thing looked like, I mean, we have completely reversed, right? And then this was where, convinced a lot of people that we're going to continue on higher, and then we needed to hold certain levels. We're not able to. This was level right here. We needed to hold that, and then we came all the way down, and then now looks like the buyers are trying to get back up here. So looking at a daily chart though, we do have a certain pivot that we have to understand, is that first of all, we have this resistance coming down here, and I do think that 200-ish level is going to be the important level. So if that inverted head and shoulder actually gets confirmed, okay, on the 65-minute chart, and if this thing gets up here, we're starting, because this thing probably want to fill these gaps, the 200 is going to be important pivot. It's a round number. Everybody's probably looking or targeting for 200. A lot of people who are buying it down here is probably a short-term trade. These guys probably are not going to commit anything long-term. So 200 is going to be an important pivot. The question is not that are we going to break above it. The question would be, are we going to create certain uptrend here, right? So which we can talk about next couple of weeks or next week or so. I can do another video next week, follow-up video next week. So when we get up here, and probably there's going to be a pullback unless this thing just blow right through it, but it looks like it's going to be very, very strong resistance because we have a downtrend resistance and horizontal pivot, right? So when we get up here, when we pull back, are we gonna pull back to kind of gather momentum, kind of let the buyers rest a little bit, and then create that higher low, and we just bust right through it? Or are we gonna just completely roll over, right? So let's not worry about that right now. Let's worry about it when we get to it. I'll do another follow-up video next week, and we'll talk about it, all right? So let's continue. Let me go through some of these stocks that I mentioned that I was going to cover before you go. Let's go through them quickly. I do want to talk about XLU. This actually has been in my watch list quite some time. For the fact, again, you're looking at daily chart here, for the fact that we have kind of formed this, again, kind of more wider pattern of inverted head and shoulder. We got left shoulder, double heads, which is stronger pattern, and then a right shoulder, right? We got the left shoulder, double heads, much stable, much solid, reversal formation there, and then we got the right shoulder, and where's a neckline? Right here. This is a neckline. We got a kind of a band of resistance right there, and we just broken above that level. We just now broken above that level. And a lot of times, many people look at this sign as a buy signal. Well, sometimes it works out, sometimes it doesn't, because it may continue high, but sooner or later we're gonna have a pullback. Think about how fast this thing got back up here. The good thing about this is that as far as a bullish sentiment is concerned, we have created a higher high. That's a good sign. Remember, this was a lower high, right? You got the high, you got the lower high, and so this was on the downtrend right here. You can see that we got a downtrend going on, and then we kind of had a lower low things going on there. But the key point was this was it, that higher low, right? That was a higher low there. So you can see where we're creating that lower highs and lower lows here, and then it failed to create a lower low. This would have been downtrend, right? Lower lows and lower highs. That's what I'm talking about, that inverted head and shoulder. We got left shoulder, head, right shoulder. All it is was it failed. It ceased to create lower low. It has created and cultivated a higher low. So then there was a little bit of hope there, and then you can see that now that we're getting above this neckline. So I think what I want to see, and let me actually go to more of a big picture here. As far as a big picture is concerned, we're still in a primary term uptrend, right? And there's a lot of talk about this potentially head and shoulder formation, like a big head and shoulder formation. You can see left shoulder, head, right shoulder. And this is exactly what I'm talking about. A lot of times these head and shoulder formation can form, but it's not always going to play out. That's something that we have to understand. Yes, we have a many head and shoulder formation happening right now in the indices. And if you look at Dow Jones and S&P 500 and NASDAQ, we have these certain head and shoulder formation, but they can form some. But what is confirmation is the key. We never confirm by breaking below the neckline. That's exactly what we're seeing in the indices today. But anyway, so that's kind of, we saw something similar today here. We had a left shoulder, head, right shoulder right there. We had a slight intraday confirmation. You see that massive bear trend, and this thing did this. So that's how this market operates, and this irritates so many people because of how this market is going to operate. That's why we have to understand not only the minor term, but we must understand the primary term perspective, so we don't get hit by that traps and head fakes and all that, right? But anyway, so we are in this primary term uptrend, which is a good sign. High lows and highs in a primary term, and then we have formed right on that support. We have formed this inverted double head, inverted head and shoulder, right? And then this is a neckline right there. So what I like to see on the utility sector is that I like to see this thing kind of pulling back, either here or maybe go a little bit above, pulling back. It doesn't have to come like exactly at that resistance or neckline level, or at least create kind of an intermediate term, a higher low, potentially, that's support here, somewhere about here, and then bounce back up, and your entry might be somewhere about here, and then you continue to ride that for about 6 months or so. And I think the utility sector looks like it's going to be strong there, and maybe possibly utility sector could lead the market as well. But the reason why I want to wait also is that this could be a massive bull trend, where before this thing do stuff like this. I've seen that happening a lot, where we get that kind of initial confirmation where it gets close above that level, and then it just traps everybody, and then this thing falls right through. So that's why this is where it's very prominent right now, and people are probably watching. Oh my God, the utility sector is going up. It's going crazy. You have to buy right now. area, and you know we have cleared this resistance. That's how most people think, but again, this is a very vulnerable area right now. We want to see a cultivation of an uptrend. So let's see, we got a higher high there. Let's see if we can cultivate another higher low, and then if we can see that confirmation of higher low, then I think you can kind of enter there for kind of more of a position trading, right? Like 6 months or so, and then kind of ride that to the upside there. Let me go through Apple. Let me go through these quickly. I spent a lot of time here. Apple, we're still kind of dealing with, let me actually go through here. So 65-minute chart here. We're still dealing with kind of a, 65-minute chart bullish divergence, and we've been talking about here. You can see that lower lows, but you can see the oscillators have creating higher lows there. So that kind of tells us that we have kind of clandestine buyers there. However, things are still messy, right? So what we got going on right now is we have this gap area going on. We're still below 10 yen. We're still below 20 MA. I think if this thing is going to become some kind of a double bottom, we need to clear at least 101.31 level. We do have a gap area here. We have another support level here. Resistance. There's a lot of resistance level. There's a resistance level there as well. And just like I read an article on this. We talked about how that this probably could be the last savior on Apple. You can see if you look at, kind of pay attention to the 200 SMA here, weekly chart. This is a 200 SMA right here, that pink right there, pink, and this is a last level of pink. 200 SMA on the weekly chart. Does that mean that it's gonna bounce there? No, it's not. That's not mean that we could obviously continue lower. But given the fact that we saw a lot of buyers in this vicinity back in 2009, and we saw the buyers back in 2013. People are watching this. Not like everyone's watching weekly 200 SMA. It's just that people are kind of seeing, like, after a certain decline in their instinct, they're like, huh, last time I bought some, at this level, things got pretty good. So there's most people gonna trade with their instinct. They're not too strategic. They're not too strategic. Most people are not too strategic. You'd be surprised. And most people are not too, sophisticated, respectfully. So they would just, and a lot of times, hey, actually there's a Money Magazine Forbes article that came out that brain damage investor do 25% better. Yeah, go Google search brain damage investor do better. Forbes, I think, came out. They actually did research on it. It's true. So people who just kind of like, they do whatever, their instinct tells them to do, or they don't have, and what they're saying is basically because they don't have emotion, they don't have fear. So that's why brain damage investors do better, because people are sophisticated and things like that. They could be driven, their intellect could be driven by their emotion or fear, and that could hinder their decisions. Anyway, so we have this weekly 200 SMA there, and that could potentially be, I'm not sure. But also another thing that we talked about is that 50% retracement level doing a primary term. You can see we just measured that. We came down exactly at 50%, which also coinciding with the weekly 200 SMA there. And if I do the exact same thing to this move right here, right, from here to here, let me just make that a little bit more precise right there. We're just right at that 50% again, also coinciding with the 200 SMA. Does that mean that it's going to bounce? That does not mean that it's going to bounce. It means if it's going to bounce, this could potentially be that level. Obviously, looking at this weekly chart, we are at that major pivot, right? This was strong resistance back in 2012, and then it was support here and here and here. So, but we haven't seen any kind of substantiation of that argument, right? We have not seen much of price action here. So we continue to have to watch that and see how it plays out. The sentiment is definitely bearish on Apple here. We're just barely dangling around. This is pretty much the last level. I mean, this could go up and then create kind of a lower high, and then boom, if we do that, then we have a confirmation of the weekly head and shoulder formation. We talked about that huge head and shoulder formation. But again, we talked about on the utility sector, head and shoulder formation can form. Sometimes it does not play out. So we have to continue to watch and see. Obviously, again, sentiment is bearish, but then weekly that 20 MA, we're still acting as resistance. We haven't even begun to get above 10 MA. So let's see if we can get something above that. We do have a gap here. If we can fill that gap, maybe something. But even then, we have to get above 101.37 for something to happen there. Let's go to Amazon. this probably the next level of support here. We're kind of was a strong resistance in the past. We're kind of back at that level. Looking at this daily, we're right at the 200 SMA. We're in a downtrend, obviously, and more of an intermediate term downtrend. We got the lower high and lower low, intermediate term. Let's look at a more primary term. Primary term, we're still in the vicinity of uptrend, right? Are we not? I mean, we're still kind of, looking at a more primary term. So let's see. If you want to do a little bit of Fibonacci here on Amazon, let me just do this right there. So I measured this move where it came down to exactly at 50%. That's interesting to note that that's exactly what it did on Apple, right? So let's do that on this move. See where we're at right now. So we go up. Man, I was gonna make this video short, but it always go low. So we're not quite there at 50%. We're just right on the 38.2% retracement. So potentially could come down. I'm not sure. We did break below this uptrend support there, so we could go up, kind of get down. So obviously Amazon looks bearish at this point. Price action tells us that there's still a warning sign there, and looks like there's a correctional phase, and people are kind of taking their money out, taking profit here. But I think next level support will be right about here at 475. So I think this is kind of time to kind of stay away from it. Let's go to Facebook here. Oh, Facebook. I haven't seen Facebook until today. Looks like we had a good, is it an earnings? Yeah, we had a good earnings there. We have created higher high. So the primary term resumes for Facebook. I mean, Facebook's been very, very strong. We got a high there, higher high there, high there, low, higher low, right? Are we still in a primary term uptrend? Yes. And as far as like a minor term sentiment or the candlesticks down to sentiment is concerned, we do have shooting star type of candle there. That's not a shooting star, actually. That's just a doji, high wave doji there. We have kind of a maybe evening star type of formation. We got a bullish candle, we got a doji, and then we got bearish candle, and we're just right at it. If we lose this level, evening star has formed, but it has not confirmed. So if that evening star confirms, probably it could come back down to about 107, and then if there's more selling, could continue, could continue even lower than that. But again, it must confirm, or this could become a bull flag. If we kind of fizzle around a little bit here for a couple of days, then we may continue higher. So that's something to watch out there. Let's look at Tesla. Tesla, there's something that, we've been talking about Tesla, and I've been staying away from Tesla since I traded. Up here, I just don't like, just this kind of pattern here. We kind of looks like this massive head and shoulder formation, just not a stable looking pattern there. Obviously, we're breaking below this important pivot level there, but remember what we talked about there. After this kind of move, breaking below below this support level, that's how this market operates. And this is probably not the level to short. This is probably a level to see if there's gonna be kind of traps or head fakes or shenanigans, because this is where the market will lure in the sellers and then just do shenanigans. So if the Tesla wanna kind of somehow reverse back up, or make something out of this, what I like to see, this thing is going up here, or completely reverse this. This is kind of what I like to see. I mean, I wouldn't want to buy, I wouldn't want to go long on Tesla until we see something like that, and that could take months before it continue to cultivate. Otherwise, we have downtrend just coming down here. So if this thing goes up and hit that, and then boom, then we'll continue downtrend. We could be forming some kind of a falling channel there. So Tesla just not looking attractive. And looking at it like a monthly chart, I mean, look at this thing. This thing is crazy. Looking at this monthly chart, we got like a massive double top pattern confirming there. Not only that, we have bearish divergence, pretty serious bearish divergence on the monthly chart as well. So this is kind of a warning signal on Tesla. What that could tell us is that there might have been some kind of a hype that brought this thing right back up, and could be kind of a danger here. Maybe this even telling us that even fundamentally there could be something there. It is price actions conveying that something like that. If I want to go short, I would rather see this thing getting clean, doing another higher low, or lower high, I mean. And then when it gets rejected, I think that's kind of more smart way to go short, rather than going short right here after this kind of move, right? So that's Tesla. Lastly, Google. We've been out of Google since close to 800 there. That was our target since last year, early last year. But ever since then, it's just been I think the problem with Google is that, I mean, I guess anything could go, but it's just like after this kind of big gappy move, I mean, how far can it go? Can it really go to the moon? Especially there's a lot of fear in the markets. I think we're probably gonna struggle here, maybe even move sideways. Google tends to do stuff like that, where it like move sideways a little bit and then continue on, maybe wait for the market to kind of restabilize itself. What I mean by sideways, I mean, it's still gonna look like, you know, it's in a big trouble. This is what I mean. You see how Google does it? We get a big move and then it like starts to move sideways. I mean, that's a big swings though, but that's definitely some kind of a channeling action. We did something like that up here. Google's kind of, you know, as far as the price action is concerned, Google tends to kind of do that and then restabilize itself and then boom. So I think maybe there's something like that happening, maybe waiting on the market to kind of restabilize. Maybe this is where it's gonna do that, like boom, 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 and then get up. I don't know, but I think next level support definitely is about 706 level here, kind of a heavy selling there. You know, looking at a weekly chart, we got like a shooting star type of candle, not a good sign. That's pretty big wick there, upper wick. Good sign is that we don't have bearish divergence. I mean, we got higher high, and then we got higher high on the MACD and stochastic and RSI. We got no. It still would have been a big problem if we had MACD was going like this. We have bearish divergence, and that's a problem. So that's how you look at bearish divergence. You know, Netflix had a very strong bearish divergence. That's, you know, on the weekly chart. Here, I'll show you right there. Again, this is a weekly, right? This is what I'm talking about. You see that higher high, right? And then we got what? Very, very steep lower high. See that? So Google don't have that, which means, you know, it is, as far as the price action is concerned, it's healthier than Netflix. And so I guess I'm gonna add Netflix onto this too. Netflix, I'll end the video with, again, I didn't mean to go this long, but the Netflix is again, it's getting in trouble here, but we were kind of getting into that support. We do have a kind of a hammer there after this kind of sell off. I mean, you know, daily chart, looking at daily charts, we're at an oversold status here. We do have a hammer, but again, hammer itself is not enough. You had a huge hammer here, just didn't amount to anything. You need confirmation. You see that big bullish guy, they didn't have a confirmation. We continued lower. We got a hammer, didn't have a confirmation, continued lower. We had a hammer here. If we don't have confirmation, it could continue lower. I mean, what I like to see, if you want to kind of like, you know, if you want to go long on Netflix, what I like to see is probably something like this. So this is kind of a, you know, resistance there, all these moving averages there. So go up, you know, or even here, somewhere here, or here, and then pull back and then do that. You know, kind of create inverted head and shoulder. A lot of times, kind of that's how the market likes to reverse with the inverted head and shoulder. Again, what inverted head and shoulder is, I remember I taught you guys that all it is we need to see that higher low, right, and then a higher high. So that's kind of how I would approach it. Netflix, I really don't want to go long, especially with the weekly bearish divergence and this kind of a massive double top starting to confirm here, but we're still hasn't confirmed yet. Keep that in mind. A lot of times it's gonna look like it's gonna confirm, it doesn't. Right here you can see that pretty similar action there. We had this kind of a very, very awkward and odd looking, this double top or triple top, just ugly looking head right here, and looks like this thing is gonna go to nothing, and then that's what it did. That's how this market operates. It inflicts fear, and most people are kind of running away from it or not watching it anymore. Then it tends to do something like that. So I'll, you know, kind of watch this Netflix, because we haven't really fully confirmed yet, and who knows what's gonna happen here. So that's kind of how I go about doing that. So have a great night. Thanks for watching, and I'll do some follow-up video next week, maybe even this weekend if something happens. Again, that spider, that 65-minute chart bullish divergence, that's kind of what I will be watching. You know, rest of the week this week and next week. Remember we talked about this level here, 195. We need to get above that level, and if we can do that, I think the initial confirmation is there, and then potentially then we could get up to about 200, 204-ish level. But again, if this inverted head and shoulder does not confirm on S&P 500, things gonna get very, very gloomy for the buyers. But if we do get this inverted head and shoulder confirmed, I think at least a minor term, buyers gonna try to step up here. But again, there's gonna be a kind of a big resistance coming in around 200, 204 level. This is gonna be a strong resistance if we do get up there. So then again, we'll have to look at the market again next week, and then we'll go from there. Have a great night. I'll talk to you guys later.